You're about to witness 25 documented trading disasters that reveal the dark psychology of market failure. These accounts are based on over 500 real cases from court records, regulatory filings, and behavioral finance research. While we've protected individual identities to focus on the lessons rather than the persons, every psychological pattern you're about to see is painfully real and could happen to anyone who enters the market unprepared. From a Buddhist monk who gambled temple donations to a billionaire who live-streamed his own destruction, each thought they were different, each learned the same lesson. In trading, you don't battle the market, you battle yourself. And when you hear case number 7, you'll understand why the market's greatest edge isn't intelligence. It's knowing when to get out of the water. Welcome to Trading Psychology Stick, where we study the minds that lost to the markets so yours doesn't have to. Quick reminder, this is psychological education based on documented patterns, not financial advice. Consider this your behavioral mirror, not your trading manual. Tire 5, Shallow Water Drownings, The Rookie Disasters. Case 25, The Temple's Sacred Gamble. Psychological pattern, Sacred Money, Bias. Location, Southeast Asia, year, 2020s. In the calm waters of a major Asian city, a Buddhist monk discovered Forex trading. This spiritual leader wasn't gambling in his mind. He was multiplying Buddha's money for temple renovations. Here's the psychology. When money feels sacred or purposeful, we take bigger risks. The monk turned $30,000 in donations into $50,000 in 1 month. The temple celebrated. But sacred money drowns just as fast as sinful money. A sudden currency surge created a tsunami in his account. 3 days, everything gone. Plus $50,000 borrowed from private lenders for Buddha's work. The centuries-old temple's reputation was destroyed. According to local reports, the monk now works in construction, learning the hardest lesson. The market doesn't care about your intentions. Ever traded with money meant for something important? That's sacred money bias drowning you. Case 24, Manifesting Margin Calls. Psychological pattern, social proof fallacy. An Instagram influencer with 250,000 followers built her brand teaching abundance mindset trading. She posted screenshots of profits daily. Students paid $500 for her spiritual trading course, but investigations revealed every screenshot came from demo accounts. The influencer believed success was just confidence. When students started losing, she created a $10,000 inner circle and used that money to trade for real. The crypto flash crash of late 2024 revealed everything. Her live stream showed $200,000 vanishing while she chanted affirmations. According to online reports, 3,000 students lost over $2 million total. She disappeared from social media, but you can't manifest your way out of margin calls. Still following trading gurus? Let's see what happens when real professionals enter these waters. Case 23, The Pilot's Deadly Descent. Psychological pattern, expert transfer delusion. A commercial airline captain with 20 years experience applied aviation discipline to oil futures trading. Checklists, risk protocols, safety systems. He even traded from the cockpit using in-flight Wi-Fi during long hauls. Here's the delusion. Expertise doesn't transfer between domains. Flying requires following rules. Markets require breaking them. Court documents show he was monitoring a $400,000 oil short during landing procedures when OPEC announced surprise production cuts. By touchdown, his retirement fund was gone. Aviation authorities discovered he'd been trading while responsible for passenger safety. Now grounded permanently, he teaches about addiction at pilot training centers. The irony cuts deep. He could navigate storms at 500 mistasta but couldn't navigate a simple futures contract. Think your professional skills make you a better trader? This next story shows otherwise. Case 22, Inherited Wealth Syndrome. Psychological pattern, inheritance entitlement. Location, Eastern Europe, year 2024. The daughter of a sanctioned oligarch inherited $50 million in offshore accounts. At 24, she built a high-tech trading floor to prove she wasn't just living off family money. The psychology is brutal. Inherited wealth feels infinite, so risks feel minimal. She hired former Goldman Sachs traders, started conservative, then leveraged heavily into emerging markets. Because when you've never experienced poverty, you can't imagine it. According to financial investigations, a single currency crisis destroyed her. 10-to-1 leverage on a political sure thing. She removed stop losses, certain the situation would reverse. By her 25th birthday, 45 million had evaporated. The remaining funds were frozen by international sanctions. Recent reports indicate she now teaches languages in the Middle East. Her luxury goods sold at auction. Generational wealth became a generational warning in 12 months. From riches to rags, all backgrounds drown the same. Watch this firefighter's final alarm. Case 21, fighting fires, feeding the flames. Psychological pattern, desperation, acceleration, location, American Midwest, year 2024. A veteran firefighter with 30 years of service faced retirement with bad knees, damaged lungs, and a pension that needed to work harder. A colleague showed him safe option strategies during injury recovery. Here's how desperation drowns you. Small wins make you hungry. He made 2,000 monthly selling covered calls, then discovered naked puts with unlimited risk disguised as income generation. His body could handle fire. His mind couldn't handle greed. The regional banking crisis of early 2024 revealed his positions. He had sold puts on every failing institution, collecting easy premiums. In 48 hours, his $380,000 pension became negative $50,000. The hero who ran into burning buildings couldn't escape this financial fire. Public records show ongoing litigation with his brokerage. At 57, he works overnight retail shifts. Sometimes the bravest in one arena are the weakest in another. Notice something? They all thought the rules didn't apply to them. The monk had dharma. The pilot had discipline. The oligarch's daughter had birthright. This is exceptional thinking, trading's first deadly sin. But watch what happens when the water gets deeper. Tier 4, the riptide zone, professional failures. Case 20, the quant's miscalculation. Psychological pattern, intelligence hubris. Location, American Northeast. Year 2024. A mathematics professor with 3 advanced degrees from a top university developed algorithms that predicted market inefficiencies. She mortgaged her home for $500,000 to fund her perfect system. Here's the trap. Intelligence becomes arrogance. Her system showed 20 years of flawless backtests, 6 months of real profits, sharp ratios above 3. Then the equations met reality. Her strategy got crowded. The August 2024 quant quake saw dozens of similar algorithms unwind simultaneously. The woman who solved partial differential equations couldn't solve for human behavior. Her stop losses triggered a cascade, turning academic brilliance into bankruptcy. IQ doesn't equal trading success. Sometimes it guarantees failure. Speaking of misplaced confidence. Case 19. The janitor who said, Number, psychological pattern, wisdom through humility. Location, New York City. Year, ongoing. A maintenance worker cleaned trading floors at a major investment bank for 20 years. Traders mocked him, threw tips, shared can't-lose trades. One intoxicated trader offered a $50,000 loan for a guaranteed play. He said no. That trader blew up the next week, lost everything on the same sure thing. Meanwhile, the janitor kept cleaning, kept saving, kept saying no. His savings account grew slowly, but never shrank. His dignity remained priceless. Today he owns a small apartment, sends his children to college, sleeps peacefully. Half the traders he cleaned up after are broke, divorced, or deceased. Sometimes the smartest trade is not trading at all. Not everyone has this wisdom. Meet someone who won the lottery twice and lost it all once. Case 18. The lottery winner's curse. Psychological pattern, windfall syndrome. Location, Latin America. Year, 2023. A factory worker won $5.2 million in the national lottery. At 34, she quit immediately, determined to multiply her miracle through trading. And windfall psychology is vicious. Unearned money feels infinite. She learned trading from YouTube, started with 1 million. Her thesis was that her country's currency was overvalued. She was right. Her timing was catastrophically wrong. She shorted the peso with massive leverage. It strengthened for 3 months, liquidating her positions. 3 days after her forced exit, exactly as she predicted, the currency crashed 20%. The market agreed with her analysis but destroyed her anyway. She returned to the factory. Her coworkers know she won millions. They watch her clock in daily, a walking reminder. Being right means nothing if you're early, and early equals wrong. From lottery tickets to streaming disasters, this next story will haunt you. Case 17, the streaming catastrophe. Psychological pattern, crowd psychosis. Location, North America. Year, 2025. A popular gaming streamer turned trading into performance art. His 50,000 viewers voted on every trade. Democracy meets degeneracy. He built $200,000 from donations and community wins. Here's how crowds kill. Individual wisdom becomes collective stupidity. Chat voted for increasingly risky plays. The streamer, addicted to viewer praise, couldn't say no. His identity merged with his profit and loss. The final stream came when chat voted all in Tesla, puts before earnings. He hesitated. Chat spammed. Donations poured in with messages pushing him to act. He clicked submit. Tesla beat earnings by 50%. $200,000 vanished in one candle. Chat exploded with memes and shock. Some laughed, some cried. His stream ended forever. When you trade for others' approval, everyone drowns together. Think that's dark? Wait until you see what happens when medical professionals trade life and death. Case 16, the ICU nightmare. Psychological pattern, adrenaline addiction. Location, Canada. Year, 2023. An ICU nurse discovered Asian market volatility during night shifts. Between dying patients and live positions, she found trading delivered the same adrenaline as medical emergencies. Addiction psychology is simple. You need bigger hits. She progressed from Forex to futures to options. She'd check positions between critical procedures. The hospital Wi-Fi became her dealer. One night, managing a cardiac arrest and a margin call simultaneously, her brain split. Instead of closing a losing yen trade, she doubled it. The patient survived. Her account flatlined. Medical board records show $65,000 in savings lost, and nursing license suspended after investigation. She now works at vaccination clinics, banned from critical care. When you're addicted to adrenaline, you'll find it anywhere, even if it kills you. Let me ask you something uncomfortable. Which story is yours? The overconfident professional? The desperate pensioner? The adrenaline junkie? We all see ourselves in this ocean. The question is, will you get out before the water gets deeper? Tier 3. Swimming with sharks. High minus stakes individuals. Case 15. The trader who walked away. Psychological pattern, ego transcendence. Location, Chicago. Year, 2024. A portfolio manager ran $500 million at a top hedge fund by age 26. Corner office, 7-figure bonuses, media coverage. Then she noticed something. Every successful colleague was miserable, divorced, addicted, dead inside. Here's rare wisdom. She ran the numbers on happiness like a trade. The ROI was negative. In January 2024, at peak earnings, she did the impossible. She quit. Colleagues called her insane. You'll regret this forever. Today she operates a small farm in New Zealand, teaches financial literacy to locals. Her social media shows sunsets, not screenshots. Her millions remain intact because she mastered the hardest trade, selling your ego at the top. She's the only winner on this list, not because she made the most, but because she kept it. Sometimes the best swimmers know when to leave the ocean. Not everyone has this wisdom. Some seek revenge in the waves. Case 14. Trading for revenge, drowning in rage. Psychological pattern, emotional hijacking. A successful lawyer's wife left him for his business partner. The divorce settlement, $2 million. His plan, turn it into $20 million to show her what she lost. Revenge psychology corrupts everything. Every trade became a message. He shorted his ex-wife's new husband's company, posted positions publicly for her to see, traded with pure hatred, not logic. The market doesn't care about your revenge fantasies. Emotional trades lost consistently. Desperate to win, he leveraged everything on bank shorts before elections. The banks rallied 30% on results. $2 million became zero. The apartment was foreclosed. The revenge consumed only him. Court records show his ex-wife never even saw his posts. He now teaches meditation, finally at peace. When you trade for revenge, you only destroy yourself. Emotions kill traders, but what about those who see through the scam? Case 13. The Discord Detective. Psychological pattern, productive paranoia. Location, Southeast Asia. Year, 2024. A computer science student joined a 50,000-member trading Discord. Unlike others, the 22-year-old coder built a bot, tracking moderators' real trades. His discovery? Mods bought before alerts, sold into member buying. Classic pump and dump. But his paranoia became profit. He started shorting their picks after pumps. For 3 months, he made $30,000 betting against the scammers. Then he went nuclear, posted everything. Screenshots, blockchain analysis, voice recordings. The server imploded. Regulatory investigations began. The plot twist? He returned profits to scammed members he could verify. Now he runs legitimate trading education. Sometimes the best trade is betting against the criminals. Heroes are rare in this ocean. Most drown like this gaming champion. Case 12. Game over for real. Psychological pattern, game transfer delusion. Location, South Korea. Year, 2023. A top esports player earned $400,000 yearly dominating competitive gaming. The champion figured trading was another game to master. Quick reflexes, pattern recognition, emotional control. But markets aren't games. No respawns, no pause, no practice mode. His all-in-tournament mentality, perfect for gaming, became fatal for trading. He turned $50,000 into $200,000 on crypto. Sponsors noticed. Then came the collapse of a major token. $400,000 vanished in 48 hours, including borrowed sponsor money. Banned from esports for bringing disrepute, he now works food delivery. His streams get minimal viewers. Game over means different things when real money burns. Young phenoms crash hard. But what about those trying to save lives? Case 11. The Surgeon's Shaking Hands. Psychological pattern, desperation, distortion. Location, Australia. Year, 2024. A heart surgeon with perfect precision applied identical methodology to trading. Careful planning, risk assessment, flawless execution. For 2 years, his surgical approach yielded steady 20% returns. Then his daughter developed a rare condition. Insurance wouldn't cover experimental treatment. The steady surgeon suddenly needed money fast. Desperation destroys discipline. His careful plans became casino gambling on biotech stocks. One FDA rejection vaporized $800,000 meant for treatment. His hands, rock steady in operating rooms, now shake holding phones. Medical directories show he works locum shifts across the country, chasing payments. When desperation drives your trades, precision becomes poison. We're entering deeper water now. These aren't just losses. They're identities dissolving. $1,000,000 egos meeting $1,000,000,000 realities. If you're still watching, ask yourself, what would it take for you to walk away? Because these next swimmers couldn't answer that question. Tier 2. The deep sea pressure. Elite individual disasters. Case 10. The Grandmaster's checkmate. Psychological pattern, strategic rigidity. Location, Eastern Europe. Year, 2023. A chess grandmaster with 30 years of competition declared, "Markets are just chess with money." He built algorithms based on chess strategies. For a year, they worked perfectly. Here's the fatal flaw. Chess has rules. Markets don't. When his first black swan appeared, he froze like facing an illegal move. His brain, wired for structured thinking, couldn't process chaos. $2 million evaporated while he analyzed impossible price action. The grandmaster who calculated 20 moves ahead couldn't react to one unexpected candle. He now teaches chess to children, warning them, life isn't chess. Most games have no rules. Even grandmasters drown. But knowledge workers sink faster. Case 9, the code that killed. Psychological pattern, creator's blindness. Location, Asia Pacific, year 2023. A blockchain developer coded smart contracts for major DeFi protocols. She spotted arbitrage opportunities in her own code, built a bot to exploit them, turned $30,000 into $400,000. Creator's blindness is brutal. You can't see your own flaws. During a routine update, her bot's logic inverted, buying high, selling low. While she slept, it executed 10,000 backwards trades. She woke to negative $200,000. The cruel irony? She'd fixed identical bugs for others. Now bankrupt, she works for the same protocol her bot traded. They hired her because expensive mistakes make excellent teachers. Coders can build fortune and ruin. Old money faces the same fate. Case 8. The Aristocrat's Last Stand. Psychological pattern, privilege poisoning. Location, United Kingdom. Year, 2024. A member of nobility inherited vast estates and £10 million. He believed centuries of wealth management was genetic. He built a trading room in a medieval tower. Here's how privilege kills. It makes you believe you're special. He hired quantitative analysts, but overruled their warnings with aristocratic certainty. Leveraged ancient land for modern forex trading. Brexit effects should have been predictable to British nobility. Instead, he bet on currency strength with 50-to-1 leverage. The pound crashed. Margin calls don't respect titles. The estate, held since the 1600s, was foreclosed in 2024. He now gives tours of his former home from staff quarters. Tourists document the riches to rags story. Nobility doesn't transfer to trading screens. But here's the twist. His middle-class son begged him not to trade, even offered to manage the money. The aristocrat refused advice from new money. That son bought the estate at auction. Sometimes the water drowns the proud first. Privilege can't protect you. But what about those seeking justice? Case 7. The Whistleblower's Perfect Storm. Psychological pattern, righteous risk-taking. Location, Eastern Europe. Year, 2023. A finance executive exposed massive fraud at her energy firm. Fired, blacklisted, threatened. She decided markets would deliver justice the courts wouldn't. Using inside knowledge of fraudulent positions, she built massive shorts through offshore accounts. Every fake earnings report strengthened her conviction. She wasn't gambling, she was certain. When authorities finally raided, the stock crashed 90%. Her $50,000 life savings became $3 million. But here's the beautiful part. She donated everything to fund whistleblower protection. Her bosses got prison. She got purpose. She now helps other whistleblowers navigate markets and law. Sometimes the best trades come from the worst experiences. Sometimes the ocean delivers justice. Justice is rare. Social media prophets usually just deliver pain. Case 6, the social media messiah's fall. Psychological pattern, audience capture. Location, United States. Year, 2225. An anonymous trader built 3 million followers sharing his wins. He turned $1,000 into $100,000 during meme stock mania, Gen Z's trading profit. Here's how audiences kill you. Their expectations become your reality. Every trade had to be bigger. Every win had to be public. He started believing the comments, started trading for likes, not profits. January 2025's biotech squeeze play went to zero on failed trials. The live stream showed $2.3 million evaporating. Comments turned from worship to hatred. Followers lost 50 million collectively. The anonymous prophet was revealed as a 23-year-old from Middle America, now $400,000 in debt. Federal investigations ongoing. His final stream, I believe my own hype. He works in construction now. When you trade for an audience, you perform your own execution. 5 souls remain, 5 warnings from the deepest trenches. These aren't just traders who lost money, these are humans who lost themselves. If you've made it this far, you're about to see why some losses echo forever. Tier 1, Legends of the Abyss, the deepest drownings. Case 5, the billionaire's public execution. Psychological pattern, performative destruction. Location, Japan. Year, 2020. A well-known Japanese entrepreneur and space enthusiast publicly shared his trading journey. According to his own social media posts, he lost 4.4 billion yen, approximately $41 million, during pandemic market volatility. He admitted to being blinded by virus-driven market swings and engaging in repeated short-term trading, something he wasn't familiar with. He expressed deep regret, wondering how many people that money could have helped. But he did something profound. He turned this public failure into education. He continued building businesses and teaching financial literacy. Sometimes the biggest losses create the biggest impact when shared honestly. Individual losses can inspire, but institutional failures cut deeper. Case 4, the charity's children, psychological pattern, savior complex. Location, North America, year, 2022. According to regulatory filings, a children's charity fund manager turned $10 million in donations into $50 million during the bull market. 300 sick children depended on her continued success. The savior complex is insidious. Good intentions justify any risk. She leveraged everything for more children saved. When biotech stocks crashed, she didn't cut losses. That would mean abandoning kids. 1 week, $50 million to zero. Treatment funding vanished. The downstream effects were tragic. Investigation records show the manager attempted self-harm, but survived. She now works minimum wage, giving everything to victims. This is why our list exists. When you trade with others' lives, drowning alone becomes impossible. Charity disasters haunt forever. Crime pays even less. Case 3, the flash crash architect. Psychological pattern, systemic sociopathy. Location, London. Year, 2010 to 2015. Navinder Singh Sarao traded from his parents' London bedroom, but moved trillions. The trader, later diagnosed with Asperger's syndrome, discovered how to profit from market microstructure. On May 6, 2010, his algorithms contributed to erasing $1 trillion in minutes. Pattern brain psychology. Markets were puzzles, not people's pensions. For 5 years, he made $70 million from his activities. The FBI caught him in 2015. Investigation revealed the twist. Wealth managers had scammed him of almost everything. The man who moved markets couldn't spot basic fraud. He received home confinement. Sometimes the ocean's biggest predators are also prey. Individual crashes are contained. But what about those who trade on others' misery? Case 2. The dark edge. Psychological pattern, predatory trading. Location, United States. Year, 2022 to 2023. A cybersecurity professional discovered the ultimate edge. Criminal forums discuss targets openly. Short companies before attacks. Profit from chaos. For 18 months, his predictions seemed genius. 100,000 became $3 million. He rationalized. Companies were already doomed, just capitalizing on inevitable. Federal authorities noticed patterns. Under surveillance, he made his biggest trade, shorting a hospital chain. But authorities prevented the attack. Stocks soared. Caught between confession and bankruptcy, he chose prison. Court records show 5 years federal time and lifetime trading ban. He teaches cybersecurity to inmates now. When your edge requires others suffering, you're already drowning. Crime doesn't pay. But what about those who try to predict nature itself? Case 1. The weather prophet's perfect storm. Psychological pattern, God complex. Location, United States. Year, 2024. A former government meteorologist left to trade weather derivatives. His climate models predicted agricultural yields perfectly. By 2023, his fund managed $2 billion. He was the oracle of agriculture. The God complex is trading's final boss, believing you can model chaos. He had everything: expertise, technology, capital. His algorithms incorporated centuries of data. He'd conquered randomness. Climate change made weather unprecedented. The summer 2024 polar vortex broke every agricultural market simultaneously. Historical models met non-historical weather. 1.4 billion vanished in 1 week. He returned to government work, earning a fraction of his former income. He learned what ancient sailors knew. The ocean doesn't care how well you map it. Chaos remains chaos, and chaos always wins. This tops our list because the trader who taught me this made $847,000 last year, working 2 hours a day. The trader who ignored it? He's driving Uber now, still checking charts at red lights. You wake up at 3:47 a.m., heart pounding. The chart glows back at you like a silent judge. Red candle, stop loss, gone, again. Your breathing slows, your fingers hover over the mouse, but you don't click. Not yet. Because something inside you whispers, maybe this time it wasn't the market. Maybe this time it was you. You've tried everything, haven't you? RSI, Fibonacci, Bollinger Bands, clean setups. But the results are always the same. You win some, but give it back. You feel close, then it slips away. You tell yourself it's just psychology, or maybe it's your broker. Because trading isn't what they sell you. It's not a game, not a side hustle, and definitely not a get-rich-quick plan. It's something older, something deeper, something wild. Trading is the ocean, and most people drown because they think it's a road. They enter thinking it's chess, with rules and moves and certainty. But it's not. It's wind and wave, and if you can't read the sea, it doesn't matter how expensive your compass is. But here's the secret. There is a way to sail. There's a rhythm beneath the chaos, a signal under the noise. You don't need more tools. You need fewer lies. You don't need more indicators. You need your eyes back. In the next few minutes, you'll learn how to see again, how to cut through the fog of false signals, emotional overdrive, and self-sabotage. You'll learn why you keep losing, even when you do everything right. And most importantly, you'll discover a new way to trade, a simpler way, a way that lets you ride the storm, not be swallowed by it. Welcome to Trading Psychology Stick, where we strip away the noise and reveal what actually moves your account. Nothing here is financial advice, just raw insights from the trenches. So, grab the wheel. This isn't just a video. This is the first day you stop pretending and finally start sailing. Section 1. The map is not the territory. You've probably heard this phrase before, trade what you see, not what you think. But here's the twist. Most traders aren't seeing at all. They're reacting to colored lines, waiting for green arrows, checking RSI crosses like fortune tellers reading tea leaves. They've been taught to trust the map, but forgot how to read the land, and that's how you lose. Not in one big explosion, but in slow, subtle blindness. You tell yourself the RSI is oversold. You tell yourself MACD is crossing up. But what you're really doing is outsourcing your sight. You're following lagging indicators built on old data, chasing shadows of price instead of the living, breathing market in front of you. Imagine sailing with a GPS that updates every 30 minutes. That's what using indicators is like. The price is the water. It's real, raw, and right now. But most traders are staring at rearview mirrors hoping to see the future. Behavioral finance research shows that reliance on lagging indicators often leads to cognitive biases and reduced performance compared to pure price action strategies. One trader, let's call him Adam, started with all the classic tools, RSI, Bollinger Bands, MACD. He built strategies like Lego sets, but something kept breaking. He would enter based on perfect alignment, only for the price to spike the other way, until he deleted them all, just candles, just structure, and for the first time, he saw something. Price wasn't random, it reacted at the same zones. It formed wicks. It whispered direction before screaming it. What successful traders discovered, and what most pros know but few teach, is that price action is the market's language, not its prediction, its reaction, its story. You don't need to guess what's coming. You just need to observe how it breathes. Indicators will always tempt you with clarity, but they charge you the price of delay. By the time they confirm what price already did, you've either missed the wave or jumped too late. And worse, you've silenced your own instincts in exchange for synthetic confidence. So here's the truth. Price is enough. The naked chart, with clean zones, clear candles, and a patient mind, will tell you more than any flashy tool. You won't be spoon-fed, but you'll be free. And once you reclaim your vision, something wild happens. Your mind quiets. You stop fighting. You start seeing. If you've been trading with 20 indicators and still losing, type naked in the comments. Time to strip it down. When you last entered a trade, did you do it because price showed you something, or because your favorite tool told you it was time? What if, from this moment on, you saw indicators as fog machines and candles as the sun cutting through? Because this isn't about removing tools. It's about regaining trust in your eyes, in your presence, in your judgment. And when you can see clearly, really see, the map won't matter. Because now, you're standing on the land. But even with clear vision, how do you know where to aim? What are the landmarks that matter? Section 2. The 3 stars to navigate. There's a moment just before a great trade happens when everything aligns, not just technically, but intuitively. The chart feels like it's calling you, not yelling, not demanding, but whispering, now. The problem is, most traders confuse noise for signal. They see a big candle and jump in. They hear someone on Twitter say, it's going to fly, and they click. But real traders, they wait for 3 stars to align. Like sailors lost at sea who navigate by constellations. They only move when the sky is right. Structure, zone, confirmation, these are your stars. Structure is your map, the higher time frame direction. Are you sailing with the current or against it? Too many traders fight structure, trying to short up trends or long into resistance, and they call it smart money. It's not smart, it's stubborn. You must align with the prevailing wind, not pretend to be the storm. Zone is your space, the area where price has previously reacted. Think of it as the shoreline where whales tend to gather. You don't drop your net in the middle of the ocean. You find where life happens. A good zone is clean, respected, and tested, not guessed. Confirmation is your timing, the last and most important star. You wait for the candle, the rejection, the liquidity grab, the engulfing pattern that tells you, I'm ready. Without it, you're guessing. With it, you're responding. You don't try to predict the sea. You respond to its shifts. Let's rewind to someone we'll call Lucas. Lucas had been trading for 3 years, mostly break-even. Lost a bit here, won a bit there. His entries were impulsive. He'd see something that looked right and jump in. Sometimes it worked. Most times, he got wicked out. Until one week, he forced himself to follow just these 3 steps. First, he opened the daily chart and asked, uptrend or downtrend? That was structure. Then he drew zones, not based on guesswork, but on past rejections and consolidations. Finally, he zoomed into the 15-minute and waited for the candles to speak. Engulfing, rejection, trap. Then he struck. 4 trades, 3 wins, 1 small loss, total profit $2,800. It wasn't magic, it was clarity. The power of the 3 stars isn't just in trading, it's in who you become by following them. You stop jumping, you start filtering, you begin to listen, you start to trust the process. Most importantly, you stop looking for certainty and start looking for alignment. Because a chart can do anything. But when structure points one way, price reaches your zone and confirmation appears. That's no longer noise. That's your window. Screenshot this section right now. You'll need these 3 stars tomorrow morning when the market opens. So, ask yourself now, when was the last time you entered a trade because everything aligned? Not just one thing, but all 3. You don't need to master dozens of systems. You only need 3 stars. Find them, follow them, and let them guide you through the fog. But even perfect navigation can't save you if you risk the entire ship on one journey. What's your safety net? Section 3. The compass of risk. Imagine standing on the deck of a ship as the wind picks up. The sails tighten, the clouds shift, and you, for a moment, feel invincible. That's what a winning trade can do. It tricks you into believing you've mastered the sea. But here's the truth. No matter how well you sail, the storm doesn't care. The market doesn't owe you calm. And that's why every real trader carries a compass. Not to control the wind, but to control themselves. That compass is risk. Most people think of risk management as a side note, an afterthought, a constraint. But risk isn't a limitation, it's liberation. Because when you define how much you're willing to lose, you remove the fear of loss. When you plan your exit before you enter, you trade from power, not panic. And when you protect your ship, you get to sail another day. Behavioral finance studies indicate that adhering to a 1 to 2% risk per trade rule can significantly improve long-term returns by mitigating. There's a trader named Darius. He was sharp, quick, technical, but he was also arrogant. Every loss was followed by a double down. Every red candle was a challenge, and every time he won, he increased size. Until the day came, one position too large, one spike too sudden, and 80% of his account vanished in 2 hours. $47,000 gone. Not because his strategy was wrong, but because his risk was. Let me share something most gurus won't. I lost $18,000 in one trade back in 2019. Not because the setup failed, because I risked 15% instead of 1%. That loss taught me more than any win ever could. Darius didn't lack edge. He lacked boundaries. He didn't need a better system. He needed a compass. Because in trading, risk is not a percentage. It's a mindset. A declaration that says, this is how much I'm willing to lose and no more. It's the difference between a calculated expedition and blind gambling. So, how do you set your compass? Start small. Define your max risk per trade, usually 1 to 2% of your account. Stick to it no matter how confident you feel. Plan your stop loss before you enter. Use lot sizes that keep risk consistent. And most importantly, accept the loss before it happens. That acceptance frees you. It removes desperation. It anchors you in process, not outcome. Because the moment you risk too much, you stop trading the market and start trading your emotions. You chase, you pray, you freeze, and the market, like the sea, doesn't care about your hopes. Drop your biggest dollar loss in the comments below. Mine was 18,000. Sharing it makes us stronger, not weaker. Let me be blunt. You will lose trades. You will have red days. That's not failure, that's nature. The question is, will those losses teach you something or destroy everything? Risk management is boring. It doesn't go viral on YouTube, but it's what keeps accounts alive when the trend doesn't. So next time you feel the urge to size up because this setup is so clean, pause. Ask yourself, is it your edge that's growing or your ego? True mastery begins when you realize the goal is not to win today. The goal is to still be here tomorrow. But even with perfect risk management, there's a silent killer waiting in the calm waters. Can you recognize it? Section 4. The eye of the storm and the danger of drifting. Most traders think the market kills them with violence. Giant red candles, sudden spikes, wild news events. But that's not how most people lose. No, they lose in the calm, in the chop, in the silence, right before the move. The market doesn't break you when it moves. It breaks you while it waits. That in-between place, where nothing is happening, but everything inside you is screaming to do something. That's the real killer. You see, the storm has an eye, a quiet center, a false peace. And if you don't know how to recognize it, you'll misinterpret its stillness as opportunity. You'll press buttons to feel in control. You'll chase little moves thinking they're the big one. And just like that, you're caught when the real wave hits, completely unprepared. Neuroscience research reveals that dopamine from anticipation drives overtrading, increasing fees and errors that can reduce average profits. There was a trader, let's call her Mia, who had a winning day, gained $3,200, then spent the next morning watching price go sideways. No real structure, no volume, no momentum. But she got restless, opened a trade, then another, then doubled down to recover the first. By lunchtime, she was down more than she had made the day before, down 4,100. Not because the market was aggressive, but because boredom did. Here's the paradox. The calmer the market feels, the more dangerous it becomes. Not for your account, but for your judgment. The eye of the storm looks like safety. It looks like potential, but it's a test of whether you can wait for real movement instead of reacting to illusion. Professional traders know this. They mark the ranges and do nothing. They wait. They observe the behavior. They look for the signs, liquidity grabs, false breakouts, wicks that scream not yet. And when they strike, it looks effortless. Not because they are fast, but because they are patient. Fun fact, the best trader I ever met spends 80% of his day doing absolutely nothing, just watching. His motto, boredom makes millionaires. The eye of the storm is not a place to trade. It's a place to breathe, to observe, to align. Because right after the calm comes the chaos. And the ones who survive the chaos are the ones who saw the calm for what it was. Not a signal, but a setup. Type silent. If you've ever revenge traded in a quiet market, let's see how many of us fell for the same trap. Because the storm isn't the problem. The storm reveals the truth. If you're prepared, it's opportunity. If you're not, it's punishment. Most traders never see it coming because they're already in the water when it hits. But you're starting to read the weather differently. And here's the part nobody tells you. Learning to wait isn't about discipline. It's about trust. Trust that the move will come. Trust that you'll see it. And trust that you don't need to be in every trade. Only the right ones. So next time you feel the itch to act during a quiet market, stop. Ask yourself, is this clarity or is this the eye? This is the truth nobody teaches. Overtrading doesn't come from greed. It comes from discomfort with stillness. From the fear that doing nothing means you're falling behind. That if you're not clicking, you're not improving. But trading isn't like sports. You don't get better by doing more. You get better by doing right. The most dangerous trades aren't bad setups. They're good setups taken in the wrong state of mind. When you drift into the market just to be in it, you've already lost. Because now, the market isn't responding to your plan. You're reacting to your own restlessness. Quick gut check. How many trades did you take yesterday that weren't in your plan? If it's more than zero, you're drifting. So, how do you stop drifting? You give yourself permission to be still. You define your no-trade conditions. You set a maximum number of trades per day, and you stick to it. You track not just your entries, but your mindset before each one. And most importantly, you create a new identity, one where presence is more valuable than activity. Remember, trading is the only profession where doing less, but better, makes you more money. Because drifting feels harmless, until you realize you've already left your system behind. And when you drift long enough, you start making bigger mistakes, the kind that teach painful lessons. Section 5. The mirror of mistakes. There's a moment every trader fears, not the losing trade itself, but what it reveals. That maybe it wasn't the market, maybe it was you. That sick twist in your stomach when you realize this wasn't a mistake of logic, but of emotion. Not because your strategy failed, but because you abandoned it. That's the mirror moment, when the chart stops being about price and starts reflecting your patterns. Most traders avoid this mirror. They move on, close the journal, hide the red numbers, say, it's just one of those days. But here's the thing about mistakes. They don't leave. They repeat until you face them. You see, every losing trade carries a message, a secret about your blind spots, your habits, your fears. But only if you listen, because a mistake ignored is a teacher dismissed. A mistake studied is a map to mastery. Let me tell you about Elijah, smart guy, knew his setup inside out, but he kept losing in the same exact way, overtrading after a loss. He told himself each time, this one is different. But it never was. It was the same emotion wearing a different chart. One night, fed up with his results, he printed out 50 trades, laid them out on the floor. He circled the revenge trades, the FOMO trades, the just one more trades, and he saw it, a pattern. The problem wasn't strategy. It was self-soothing with the market, trading to fix feelings. That's when it clicked. The market was never his enemy. His reaction to the market was. Here's the plot twist. Once Elijah saw his pattern, he went 73% win rate the next month, not by trading better, by trading less. Here's the insight. Most traders don't have a trading problem. They have an avoidance problem. They avoid pain. They avoid accountability. They avoid the inner work that comes with staring their own inconsistency in the face. But if you're brave enough, if you look into the mirror long enough, something beautiful happens. Your mistakes shrink. They stop feeling like identity and start becoming data. They stop making you emotional and start making you wise. You begin to say, this again, instead of, why is this happening to me? So how do you face the mirror? Simple, but not easy. After every week, do a review, not just on profit, but on behavior. Where did you follow plan? Where did you abandon it? What emotion showed up most? Where did you feel yourself drift? And, this is the hardest, what would the next level version of you have done instead? Because this isn't about perfection, it's about pattern recognition. You're not trying to eliminate all mistakes, you're trying to see them sooner, interrupt them faster, learn from them deeper. What's the most expensive lesson the market has taught you? I'll go first. Trying to catch falling knives cost me $32,000 before I learned to wait for the bounce. Let me ask you, what's the mistake you keep making silently, hoping no one notices? That's the one that holds your breakthrough. Your trades are talking to you. Are you listening or are you blaming? Because once you stop fearing your flaws, they lose their power. But mistakes are just one half of the equation. The other half, testing your edge before real money is on the line. Every trader dreams of being live, real money, real stakes, real adrenaline. But few ask the deeper question, am I ready? Because live trading doesn't test your strategy. It exposes your gaps. And the most painful gap of all, entering the ocean without ever practicing in the pool. Too many skip the prep. They watch one video, draw 2 lines, and fund an account. But trading is a craft, a discipline, a skill set forged through repetition, not instinct. And if you don't train before you sail, the sea will devour you. This is where most break, not because they're untalented, but because they're untested. They confuse demo trading with wasting time. They treat backtesting like theory. But let me tell you something few will. Every consistently profitable trader you admire spent hours in silence, scrolling through charts, logging data, burning their patterns into muscle memory. There was a trader named Amir. He blew 2 accounts in 6 months. Total damage, $35,000. Not because his strategy was bad. He'd copied it from a successful mentor, but because he didn't understand it. He didn't own it. He had never seen it perform across different sessions, market types, pairs. It wasn't until he committed to 3 weeks of pure backtesting, followed by 2 months of strict demo trading, that something clicked. His brain began to recognize behavior. His eyes saw nuance. And when he went live again, everything slowed down, because now he had trained. First live month, plus 4,200. Same strategy, different preparation. Backtesting is not optional. It's your simulator. It's where you learn how your edge behaves in the wild. You rewind months of data, apply your rules without emotion, and see, over hundreds of samples, what works and what breaks. You build confidence not from belief, but from exposure. You see the patterns unfold again and again until they become obvious. Confession time. How many of you funded a live account before completing even 50 back-tested trades? Type guilty. If that's you, no judgment. We've all been there. Then comes demo. This is not where you test if the strategy works. You already know it does. This is where you test you. Can you follow rules? Can you be patient? Can you handle waiting, missing, winning, losing, all without real money to drive your choices? If you can stay disciplined without dopamine, you're almost ready. Only then, and only then, do you go live. Small size, strict rules, one setup. You earn your risk increase by proving control, not by feeling good about your win rate. Because trading live isn't a graduation. It's the battlefield. It's where you deploy what you've mastered, not where you figure it out. Let me ask you, have you earned the right to risk real money? Or are you buying hope, skipping the work, and calling it intuition? There are no shortcuts. There is only red, test, sail. Because when the storm hits, and it will, your preparation is the only thing that holds. And preparation isn't just about strategy. It's about understanding the internal forces that drive your decisions. There's a silence that settles over you the moment after you click buy. A stillness, just a second long, before your brain begins its war. Did I enter too early? What if it reverses? Should I close now? Am I being greedy? And that's when you realize the real storm isn't on the chart. It's in you. The market may be chaotic, but your emotions, they're hurricanes. And if you don't anchor yourself before you trade, the sea will take you. Discipline isn't a rule. It's a decision you make ahead of time, to obey your system when your instincts beg you not to. Because here's what happens to most traders. They start strong, they journal, they plan, but the moment the trade goes live, everything they knew disappears. Fear takes over, hope takes over, ego takes over. And like a ship cut loose from port, they drift into the worst possible version of themselves. Recent behavioral finance reviews classify pathological trading as an overlooked addiction, similar to gambling, driven by compulsive patterns. There was once a trader, let's call her Alina, who stuck to her plan for 13 trades in a row. Small wins, small losses, steady. Gained 1,200, lost 800, net 400 profit. But on trade 14, something felt different. She was up for the week and thought, this one's the big one. She doubled her risk. Got stopped out, minus 1,600, re-entered, got stopped out again, minus another 1,600. 2 hours later, she had wiped out 8 days of work. Not because she didn't know better, but because she ignored the anchor she'd built. Here's the kicker. Alina's dog could have picked better trades that day by stepping on the keyboard. At least the dog wouldn't have revenge traded. The problem wasn't technical, it was internal. You can have the best setup, the perfect zone, the cleanest confirmation, and still blow it if you let emotion take the wheel. That's why real traders train for discipline like soldiers train for war. They rehearse calm, they breathe, they meditate, they visualize red candles and green, and staying centered through both. Because they know, emotion is the most expensive position you can take. What's your biggest emotional trigger when trading? For me, it's FOMO after missing a move. Drop yours below. Vulnerability kills its power. So, how do you build your anchor? You start by creating rules you actually follow. One setup, one time frame, one risk model. You reduce variables. You remove noise. You journal after every trade, not just for results, but for what you felt. And most importantly, you forgive yourself when you slip. Because guilt leads to revenge trades, and revenge trades sink ships. The greatest skill in trading isn't strategy. It's emotional containment, not reacting. Not needing to be right, being okay with missing, being okay with waiting. Let me ask you, who are you when you click the button? Are you grounded, focused, or are you rushing into the trade hoping to quiet your own anxiety? Because until you anchor your mind, the sea owns you. But an anchor alone isn't enough. You need a map for where you're going. Section 8. Set sail with a plan. The sea is vast, the wind unpredictable, the storm inevitable. So, how do you survive, let alone thrive? You don't wing it. You don't wake up and feel it out. You make a plan and you sail it. Because without a clear plan, you're not a trader. You're just gambling with a fancy vocabulary. Every day you enter the market without knowing your goal, your limits, and your rules. You hand your fate over to chaos. A trade plan isn't optional. It's not for beginners. It's your anchor, your compass, and your rescue rope when the emotions rise. And here's the most powerful part. It doesn't need to be complex. It just needs to be yours. And it needs to be sacred. Take Leo, for example. He started journaling his trades not for review, but for clarity before the day began. Every morning, what's the market bias? What's the key level? What would invalidate the setup? Where will I enter and where will I get out? Win or lose? That plan turned his account from chaos to consistency, from minus 5,000 to plus 23,000 in 6 months. Not because he never lost, but because when he did, he knew exactly why. A trade plan does something subtle but profound. It removes negotiation. It makes the rules clear before emotion clouds them. It says, this is what I will do, and everything else, I won't. It prevents the slippery slope of just one more trade. It protects your psychology from your psychology. So, what does a simple plan look like? Start here. First, what's my directional bias today? Am I with the trend, or is it consolidation? Second, what are the clean zones, the areas where price has reacted with meaning? Third, what confirms my entry? Specific candle patterns, reactions, volume shifts. Fourth, what's my risk? How much am I willing to lose today? And when will I stop? Fifth, what's my profit goal? Not in dollars, but in process. And finally, what will I do after I hit my target? Will I stop trading, or will I risk it all again? Pause this video and write down these 6 questions. Do it now. Tomorrow's profit depends on tonight's preparation. And that last question, it's where most traders fail. They win a morning trade and convince themselves they're invincible, so they stay. They push. And the market, always patient, takes it all back. A trade plan is more than preparation. It's identity. It says, I am the kind of person who only enters when I'm clear, exits when I said I would, and walks away when my job is done. So ask yourself now, how many times have you entered a trade not because it was in the plan, but because it was available? Because without intention, you'll be ruled by impulse, and without boundaries, you'll be bait for the market's trap. Tomorrow morning, don't just open your charts. Open your mind. Set your sails. Know your direction before you ever touch the wheel. But even the best plan means nothing if you don't track what actually happened. Section 9. The Fisherman's Log. A fisherman returns from the sea, not with just fish, but with a story, a record of where the waters shifted, where the tide rose, where the nets caught nothing. That story becomes his edge, his logbook. And for traders, it's no different. Your trading journal isn't a spreadsheet, it's a mirror, a confession, a map of your behavior, and the only way to uncover the patterns your conscious mind keeps missing. Most traders think journaling is about results, entry, exit, profit, loss, but that's just surface data. The real value of a journal is what it says about you, your state of mind before the trade, the reason you entered, whether you followed your plan or made it up mid-flight. Because here's the harsh truth. You don't trade your system, you trade your psychology. And the journal is where that truth comes out, raw and unfiltered. Let's talk about Serena. She was a disciplined swing trader, or so she believed. But her journal, once she actually wrote down more than the numbers, revealed a different story. Every time she over-leveraged, it was after a stressful day at work. Every time she closed trades early, she had slept poorly the night before. Every time she skipped setups, it was during cycle peaks of self-doubt. Her trading wasn't random, it was rhythmic, just like the market. And her journal exposed the pattern. Here's the plot twist. Once Serena saw these patterns, her win rate jumped from 42% to 73% the next month. Not by trading better setups, by trading when she was better. That's why pros journal obsessively, because the real edge isn't finding better entries, it's finding your triggers. What makes you cut winners short? What makes you revenge trade? What makes you chase, hesitate, or panic? The journal catches what your conscious mind filters out. So how do you do it? Start with every trade, win or lose, and log more than numbers. Write the why. What did you see? What were you feeling? Was it according to plan? Rate your emotional state. Were you centered, reactive, confident, anxious? What were you hoping for? And what did you fear? Over time, a strange magic unfolds. Your journal begins to speak. You'll notice patterns you never saw. That Tuesdays, you trade worse. That high-impact news days trigger more mistakes. That late-night sessions lead to emotional trades. And from this, you gain something more valuable than a strategy: awareness. Because you can't fix what you can't see, and you can't master what you don't measure. What pattern keeps showing up in your trades that you've been pretending doesn't exist? Mine was overtrading on Fridays. Drop yours below. Let me ask you, what did your last 5 trades teach you about yourself? Not the market, you. If you don't know, you're not learning, you're just looping. Your journal is the difference between repeating the same year 10 times and growing with each one. But awareness is just the beginning. True edge comes from understanding when to act on that awareness. Section 10. The rhythm of the sea. The market isn't always moving, but most traders are, clicking, scanning, forcing. And that's the trap, believing that action always equals progress. But the ocean has rhythm. It breathes, it swells, and sometimes it rests. Real traders don't just read price, they read time. They know that success isn't just what you trade, it's when you trade. You see, not all hours are equal, not all sessions offer flow. There are windows of clarity and chasms of confusion. If you trade without understanding rhythm, you'll keep casting your line in still waters, wondering why nothing bites. But if you learn to wait for the tide, everything changes. Picture this. It's the Asian session. Liquidity is thin, price barely moves. But a trader, let's call him Nate, doesn't want to waste the day. So he forces it, sees a small push and jumps in, gets stopped, minus 400, enters again. A little better, but no momentum, minus 200. By the time London opens, he's down 2 trades, emotionally rattled and completely out of sync. And the worst part, he missed the real move. The one he should have waited for. The one that aligned, but only later. That London move, plus 3,200. But Nate was too tilted to take it. Market rhythm is real. The best opportunities often come during specific sessions. London Open, New York overlap, post-news volatility. These are the tides. You don't create them, you ride them. And more importantly, you stay out of the water when it's choppy, directionless, or tired. Data shows over 37% of daily volume occurs in the London-New York overlap, with highest liquidity reducing chop and boosting performance. Here's what seasoned traders do differently. They track time as closely as they track price. They note when their setups form most reliably. They avoid the dead zones, lunch hours, pre-news chop, late Friday whips. They don't just ask, what is the chart doing? They ask, is this the right time for my edge? This is edge within edge. Knowing that a good setup at the wrong hour is a trap. That volume matters. That flow matters. That context always matters. So, how do you build rhythm awareness? Start by tracking your trades with timestamps. Note which session they occurred in, which hour, which minutes. Notice patterns. You might find that most of your winners happen between 9 to 11 a.m. EST, or that most of your losses come from trading tired ranges during Asian session. Let the data reveal the rhythm. Then, go deeper. Study how your strategy behaves across sessions. Does your setup need momentum? Then avoid early Asia. Does it need clean structure? Then skip news drops. Because trading is not about more, it's about aligned. And alignment is as much about time as it is about price. What time of day do you perform best and worst? Track it for a week and watch the pattern emerge. Your edge has a schedule. Let me ask you now, do you enter because you have a signal, or because you're impatient in a slow sea? Are you sailing with the tide, or rowing against the current? The rhythm of the sea doesn't care about your urgency. It doesn't speed up because you're bored. It waits until it's ready. And those who learn to wait with it move further with less effort. But rhythm is just mechanics. What about the deeper truth, the one most traders never discover? Section 11. Calm is the new edge. If you watched a master trader at work, you might be shocked by how boring it looks. No jumping between charts, no chasing green candles, no shouting at screens or punching keyboards. Just calm, measured, intentional, like a surgeon before the incision, like a monk in the middle of chaos. Because when you've done the work, the real work, trading stops being adrenaline. It becomes stillness. And in that stillness, you find something rare: control. There's a myth in trading that success looks exciting, that the best traders are constantly in action, constantly winning, constantly riding big moves. But that's a lie. The truth, real consistency is built on repetition, on a handful of simple decisions made over and over again, with zero emotional variation. Take Jenna. Her trading week looks nearly identical. Every single week, she wakes at the same time, reviews the same pairs, looks for the same setup. Only one. If it doesn't appear, she does nothing. If it does, she executes. There's no thrill, no panic, no searching for a new strategy. She's not addicted to stimulation. She's loyal to structure. And that, ironically, is why her results look extraordinary, because her behavior is incredibly ordinary. Average profit per week, 4,200. Not from home runs, from singles. The edge isn't found in more knowledge, more complexity, more information. It's found in reduction, in the ability to do less, but better. To ignore the noise, to trust the process, to say no 95% of the time so that you can say yes with power when it truly matters. Quick reality check. The best trader I know made $800,000 last year from exactly 3 setups. That's it. 3. How many are you trying to master? The market will always tempt you. It will whisper, what if you add one more indicator? Or try this strategy that worked for someone else. But those who succeed aren't the ones who chase novelty. They're the ones who master boredom, who find meaning in the mundane, who realize that real trading is quiet, not because it lacks power, but because it's grounded in clarity. So, what does calm look like in your practice? It looks like waiting hours for one moment and not flinching. It looks like taking the same entry you've taken 100 times before because you know it works. It looks like closing your platform once you hit your target, not staying to gamble it back. It looks like protecting your energy, your routine, your mental bandwidth like they're more valuable than any pip. Because this game isn't about who's smartest. It's about who can sit still the longest, who can stay detached, who can treat the market like a partner, not a savior, who can show up like a professional, especially when no one's watching. Let me ask you, are you addicted to trading or committed to mastery? Because if you want to make trading your future, you have to fall in love with the calm, the rhythm, the silence between the storms. And make no mistake, storms will come, losses will stack, plans will fail. The question is, when the sea turns dark, will your calm still hold? Section 12. The sea will test you. There will come a week, maybe this week, when nothing works. Every setup fails. Every confirmation turns into a trap. Your trusted strategy feels broken, your confidence slips, and the temptation to throw everything out and start over creeps in like fog. This is the moment that defines you. Not the good days when green pips flood your screen, but the days when the market spits on your plan and dares you to panic. Because the sea will test you, and it won't test your edge. It will test your endurance. Every trader hits a losing streak. It's not a question of if, it's when, and most aren't ready. They think consistency means never losing. But consistency isn't about avoiding red days. It's about staying centered when they come. Because how you behave when you lose determines how long you'll get to play this game. Let's rewind to Devin. He had a great run, 8 green days in a row, gained 16,400. He felt untouchable. Then the 9th day came. 1 loss, minus 2,000, then another, minus 3,000. By trade 3, he wasn't following his plan. He was chasing his streak. He thought, I can't end the day red. So he sized up, broke every rule, and by the end of the day, his account was down 30%, minus 24,000 in 6 hours. The streak didn't break him. His reaction did. Losing streaks are like waves. You don't fight them. You brace, you adjust, you protect the ship. Most importantly, You expect them. Because if you think losses mean something is wrong, you'll constantly self-sabotage. But if you know they're part of the sea, you'll sail through them with grace. True story. My worst streak was 11 losses in a row. Total damage, 12%. Why so small? Because I stuck to my 1% risk rule even when my ego screamed to size up. So, how do you survive the storm? First, define your max red day, a loss limit that, once hit, you walk away from the screen. No exceptions. Second, zoom out. Look at the last 100 trades, not the last 3. Third, stick to your system even when it feels like it's not working. Because abandoning your plan mid-storm is like tossing the compass overboard because it doesn't point where you want. And finally, shift the goal. On red days, your win isn't profit, it's behavior. If you can follow your rules, limit your damage, and close your laptop with your mind intact, that's a victory. Because no one gets to the top by being perfect. They get there by refusing to break when things go dark. What's your longest losing streak? Drop the number below. Mine was 11. Sharing it removes its power over us. Let me ask you now, what do you usually do after 3 losses in a row? Do you stop? Do you reflect? Or do you press harder, hoping to erase the pain? Because that decision, in that moment, is what separates gamblers from professionals. You don't grow when it's easy. You grow when it's hard, when your ego is bruised, your strategy tested, and your patience thin. And still, you stay the course. The storm is not the end. It's the forge. And when you've been forged by enough storms, you realize something profound. Section 13. The lighthouse is in you. After all the trades, all the charts, all the patterns and plans, there's a realization waiting in the quiet, a shift, a truth. You were never here just to master the market. You were here to master yourself. And somewhere between the first blown account and the first moment of peace while waiting for a clean setup, you begin to understand. The edge you were chasing wasn't out there. It was always in you. The lighthouse doesn't move. It doesn't chase the storm. It doesn't blink in the face of wind or rain. It stands still, anchored, calm. That's what you must become. Because the market will test you. It will tempt you. It will try to drag you back into the chaos you came from. And unless something inside you is stronger than the noise outside, you'll drift again. That's what happened to Marco, a trader who spent years hopping from strategy to strategy, blowing accounts, restarting, doubting himself. 3 accounts, 75,000 gone. Until one night, he closed all the tabs, shut the indicators off, turned the phone screen black, and asked himself one question. What if the real problem is that I don't trust myself? That question cracked something open. He didn't find a better system. He built a better center, a quieter mind. He began to journal for clarity, not control. He traded fewer setups, accepted boredom, protected his energy. And slowly, the storm inside calmed. 6 months later, consistent 4-figure weeks. Same market, different man. Because here's the thing. Trading is a mirror. It will reflect every part of you. Your fear, your greed, your need to prove, to win, to be right. It reveals your patterns, your insecurities, your relationship with risk and failure. That's why it's so hard. That's why it's so powerful. It forces you to become someone better, or quit. And when you stop seeing it as a way to make fast money and start seeing it as a path to internal strength, everything changes. The charts don't change. You do. Your edge becomes consistency, not prediction. Your power becomes patience, not perfection. Your identity becomes process, not outcome. Because the goal was never just to grow your account. It was to grow your character, to show up every day with discipline, humility, and presence, even when no one sees you, especially then. Here's the ultimate question. If you couldn't tell anyone about your trading results, no screenshots, no bragging, no validation, would you still do it? If yes, you're ready. If no, you're still trading for the wrong reasons. So, let me ask you, who are you becoming trade by trade? Are you chasing a version of success built on dopamine and drama? Or are you building a quiet, steady strength, one that doesn't need to shout? You won't find this in books. You won't see it on trading forums. But the traders who last, the ones who build wealth and peace, they all discover this truth eventually. The lighthouse is not a system, not a coach, not a course. It's you. And when you finally become it, the sea doesn't scare you anymore. because now the light is coming from within. But before you go, there's one more thing you need, one final step to lock this in, and it begins, not with the market, but with a choice. Become the trader who lasts. You've made it through the storm, not just this video, but the emotional sea that so many never cross. You've seen the truth few are willing to face, that trading isn't about signals or speed or some secret no one's telling you. It's about silence, repetition, depth. You've learned that indicators are just colored maps of a terrain you must learn to feel, that most losses happen not in price, but in your mind, that the setups worth taking only appear when you're still enough to see them. You've now walked through 13 layers of transformation. You saw why trusting lagging tools keeps you blind. You learned the alignment of 3 stars: structure, zone, confirmation. You built a compass with risk and dropped anchor in discipline. You discovered the danger hidden in quiet markets and the emotional war inside your own silence. You caught yourself drifting, stared into your mistakes, and trained before sailing. You found your internal anchor, set a plan to stop the spiral, and kept a log of your truth. You learned to read the rhythm of time, embraced boredom as a superpower, and survived the red days with poise. And in the end, you found out that the edge you were chasing was inside you the whole time. So what now? This is where the old you might stop. Close the tab, save the strategy, try again alone, but you're not the old you anymore. You're the version who now sees, who knows, who remembers. So here's your next move. If you're still watching after 60 minutes, you're different. You're not looking for shortcuts. Comment your biggest trading mistake below. I'll personally respond to the first 50. Why? Because vulnerability is where real traders are born. When we share our failures, they lose their grip on us. Share this video with a fellow trader still stuck in the storm. You might be their lighthouse. Sometimes one conversation, one video, one moment of truth is all it takes to change someone's entire trajectory. Rewatch this video weekly until your brain stops reaching for chaos and starts breathing in rhythm. Knowledge fades, but repetition creates transformation. Make this your Sunday ritual until calm becomes your default state. And remember this, the market doesn't reward those who know the most. It rewards those who can remain still, while everyone else loses their mind. Real trading isn't sexy. It's silent, not dramatic, but deep, not fast, but forever. Stay calm, stay steady, stay here. Because this is the beginning of the trader you were always meant to become. Your journey doesn't end when this video does. It begins the moment you close your laptop tonight and make a choice. Will tomorrow be different? Will you finally trust the process? Will you become the lighthouse? The sea is waiting, but now, so are you, and you're ready.